Hi, Yuval. How are you today?
I'm very good this Monday morning.
It's Monday evening where you are, right? You're in Tel Aviv.
I am. I'm in Tel Aviv, and it is about 11:44 p.m., the end of a very interesting, day or two or three or four.
Yeah, so that's actually why I wanted to speak to you today, was to get your take on the recent events with Silicon Valley Bank. Um, as a tech CEO who's led multiple companies through previous bank collapses, economic cycles, I think you have a pretty interesting opinion and angle on this news, and so thanks for taking the time with me.
I've seen my share of turbulence in the financial system. I mean, I lived through the financial crisis in '08, and saw the ins, the outs, the downs, and at the end, the ups of those times. So, and then of course, all the things that happened since then, the pandemic, and of course now, the collapse of SVB.
So let's start by I'd like to get your initial thoughts on when you started hearing the news. What were you thinking, and how did you see the short terms? How did you see the next 72 hours play out in your head?
The first bit of information was a little vague and hard to decipher, but kind of as the day wore on, I would say it was Thursday, which really became the kind of the pivotal day. It became clearer and clearer that things were really in not very good shape. And I actually was traveling that day, so I had a lot of time to think about it and to say, to think about all, the potential damage that it could wreak on the technology ecosystem. I mean, I know very well how deeply entrenched SVB, was in the tech ecosystem. We were, as at my previous company, we definitely had a very tight relationship with SVB, and I think that, many tech companies were very, very connected to that bank, and for good reason. I mean, they definitely had an approach that was very friendly to, our kind of businesses, and the fact that we didn't have like material collateral, for example, and had an intellectual, property collateral, and that's not as tangible. And how you build a relationship with companies that only have, the mind as collateral. I think that they were definitely, you know, inclined and also of the mind to understand the value of what we were doing, and really help us and support us in our goals. They were really the go-to place to go, actually, the place for us to, seek support, and guidance and loans and banking relationships that otherwise, not to say that there weren't other banks that, wanted those relationships, but I think that they were not as really structured, from both a strategy point of view and sort of day-to-day operational point of view, to deal with technology, software, startups, particularly software, right? So it was clear to me that it was going to be a major, if the bank was under enormous stress, and the idea that it would fail within 24 hours didn't really kind of register that quick. But as the day wore on, it became more and more clear that there was huge signs of distress and people were freaking out, and the panic was already there. And I think that would also be a component of of the technology space, is that people are, both risk, they have a lot of high tolerance for risk, but as a result of that, I think they also have a good nose for danger. And so, if people ask why was this a huge fast, run on the money for the bank, on the run of the bank, and I would say it's because the entrepreneurs that were the bread and butter of SVB's customers, they also have a good nose for danger, and when they smell danger, they want to go the other way, and they have very sharp instincts for avoiding, catastrophe in their own businesses. So, and they don't take things for granted, right? They don't, especially not money, because, we are the people who are raising the money for the business in a very active and very personal way. So we're also the ones to protect that money and to be worried about every dollar that's spent and every dollar that's raised in a very personal way. So it didn't surprise me at all in a way that that people just wanted to protect their assets and not take it for granted that it was going to be protected.
That's a really good point you make. Um, so now we're on Monday, and a few days after, and you see the short-term fallout. But what are some of the indirect effects that you think we'll experience over the next everything from a week to 6 months from now? Kind of if
Or
you
more.
look into your crystal ball, where do you see what do you see us experiencing next?
I mean, I think the biggest, derivative of it, kind of direct derivative is there is no, similar type bank out there that caters to this kind of community. And it is a community. I mean, it is a brutal community of survivalists. So people say everybody turned against the bank, and I don't think that that's the exact description of what happened there. I think I gave a better description before. I think it was more of an instinctual survival mechanism that has a good nose for danger. But I think that the flip side of that is that now that the bank is gone and its sort of philosophy is gone and its history and tradition of supporting tech companies is gone. Who's going to fill that void? I mean, that to me is the biggest question. And there was, given that the bank was around since 1983, I mean, we're talking exactly 40 years of service to the, tech community. And by the way, we say Silicon Valley Bank, but Silicon Valley Bank is long gone beyond Silicon Valley. I'm here in Israel, and obviously there's actually a Silicon Valley Bank branch and group here in Israel. So it's really the founding location is Silicon Valley, but the essence of what they were doing has spread across the world into every community that has startups. And so I don't see it as Silicon Valley Bank. I think of it as Silicon any community bank, and I don't think that there's an equal to that anywhere in the world, and it's going to be sorely missed. I think, and so that the immediate impact I think is that there's really nothing to replace it right now. One for one. And so either something will emerge or, banks, bigger banks will take that position and be a little bit more friendly to businesses like ours that are more risky and less, materially collateralized. But and I think the general, again, we're rising. We are in 2023, 15 years after the financial crisis, and again, we're encountering this lack of transparency and good decision making, and in a way, gaps in oversight. Regulators are very important to the process, but somehow they also are to blame in my mind for what happened here. It's not and I'm a big fan of regulation actually in the financial services space. That because we've discussed that before. So I'm not saying we shouldn't have regulation, but I think we should look at the regulators to understand what went wrong here, why they were allowed to take such huge risks with customers' money, and in such a concentrated way, this community put money into this bank, and so the potential impact of a collapse of a bank like that is the potential collapse of a key pillar industry in the American economy and the global economy today, i.e. the technology world. So in the technology industry, so this was a concentrated risk, and it was also a concentrated failure inside a community that powers the world's innovation. I see it as a very problematic situation and a very problematic um, um, uh, future for um, these kinds of institutions. And as a result of that, a lot more difficulty to raise capital for businesses like ours or others that are in need of that kind of support. And then at the same time, a big need for additional scrutiny on, what are the kind of risks that, institutions like this are allowed to take with their customers' money and what kind of decision oversight, is there on their, decisions around the commercials of the money that is entrusted in their institution. So I think there's, again, further need for further scrutiny on the banking industry and to go outside really the norms of what is been accepted today potentially.
So what I'd like to do here is shift gears a little bit. And while Silicon Valley Bank was a bank that mostly held commercial deposits, I think as a consumer, as us as humans, when we hear of a bank collapsing or a run on the bank, when we hear those terms, we start to think how that can impact us. And so I'd like to get your thoughts a little bit now on kind of how you think consumers' general psychology around trusting their banks will be impacted by a collapse like this. And again, even though Silicon Valley Bank didn't hold much in consumer deposits, well, they did, but they were known as a commercial deposits bank. How do you think that this impacts consumers, psychology and their just trust on banking institutions?
Look, every time something like this happens, the result is that people have less trust and less confidence in the way, bank managers per se are managing their money. So it's just another, I think, potential nail in the coffin of the traditional banking industry. But at the same time, there's not very much, not much has been invented to really replace the safe haven of a regulated bank. And that's why I think that there's an opportunity for regulators to become more potentially active and themselves also scrutinize. But I would say that beyond that, the sense that potentially there are, potential alternatives to the traditional bank will cross people's minds a lot more readily than maybe before. In that, I think you only have two options in a way. People will become more cautious, or people will become more adventurous to say, well, I think of my own career history, when I saw layoffs around me at work, I thought to myself, well, there's no such thing as job security, so I might as well go out and take risk. And I think the same thing is about, you can say about banks. I mean, what really saved the day here was the interference and intervention of the U.S. government. And I think the intervention of the U.S. government in this case was mostly focused on the idea that we were going to not save the institution and its shareholders, which are, by definition, taking risk, but definitely not, definitely not damage the depositors who had absolutely nothing to do with the decisions that were made in the bank. So I think that will allow people maybe to feel a little bit more comfortable in saying, well, it's not just Chase and Wells Fargo or U.S. Bank or Key Bank or Bank of America that have protection, but really any financial institution that operates in the United States has pretty much a guarantee that that should something terrible happen to the institution of that bank, that their money is protected by the U.S. government and its, and its protection mechanisms. And I think that's what we saw over the weekend, which I call a year in a weekend because it felt like a year from basically Thursday night to Sunday night when the government announced its actions. Um, but definitely for some of us, in the world of technology, it was a year because it didn't matter actually in my mind if you had money. And of course, I think for your own feeling, it really mattered whether you had money or in an SVB or not. But I think in a more macro sense, it didn't. As a tech entrepreneur, as a CEO, as a co-founder, as anybody working in the tech industry, I don't think you ultimately in the big picture, you really cared about what was going to happen because you were invested in the ecosystem, not just in a specific company. So I see that as an opening actually for people to be more, you know, um, accepting of other ways of storing and moving money, and potentially an opening for other, new things to emerge over the next, year or two or few years.
Yes, great points. So I know it's late over there, but before we ended this conversation, I wanted to get your take on how the collapse of SVB might affect embedded finance or people's approach to using embedded finance or picking their embedded finance partner.
I think from a point of view of embedded finance, ultimately, which was your question, I think the big thing that we offer is a certain level of flexibility about where the core funds are stored. Meaning we will have a diversity of banking institutions that we'll work with to ensure that the money is not stored in just one place. So that by that very nature, we actually almost guarantee that your funds are protected because if one does fail, which obviously is not exactly a daily thing, right? Then your money, the rest of your money or most of your money might be somewhere else. So I think that's a thing for people to think about when they think about embedded finance. I don't see this as either a huge up plus or at the same time also a big knock towards the long-term idea and the long-term potential of embedded finance.
Great, those were some really good points. Um, that's all I had. I know it's late where you are, so we can keep this short. Um, I'll open the floor for any last thoughts before we sign off here.
From my experience, dealing with crisis is always about knowing what it is that you can control and those things that you can't control, and being able to sort of separate between the two. And it doesn't mean that you feel good, but it also I'm usually quite calm under crisis, because I'm quite good at separating between the things that I can control and the things that I can't control. It doesn't mean I don't worry, but I don't have a tendency to panic or to lose hope or get desperate or depressed or whatever it is, or frantic when bad things happen. I usually think, what can I do to make things better? And if there are good things that I can do, then I'll do them. And the things that I don't control, like in this case, you don't have people who had deposits in the bank. They could only control, the speed of them taking them out on Thursday. But those who didn't, take it out because they respected the institution, um, and the relationship they had with the institution, which a lot of people did, I think, they were really at the behest of the government, and I think obviously the government came through, which is the positive and hopeful scenario, and it came to be. So you have to stay positive and stay calm, and I think that's the key, to leadership under crisis.
Well, that's a great mentality to have as a leader.
Thanks a lot.
Yeah, thank you
Yeah.
for your time, Yuval. Have a good day.
Adios.